Welcome to another video on Pionex. In this video we are going to take a deep dive on the first part of the dual investment, the buy low, as it was requested on my Discord server to have a deep guide. First of all, how do we find this feature? On the web it's earn structured dual investment. On the web you normally find on the bottom the wallet, and then when you click on that, on the top you find structured. Before we go any further, this is no financial advice and it's only what I've been doing, what I know and how I understand it. First we need to talk about the terminology. What is actually buy low, or what is dual investment in general? So you get paid a premium for the obligation that if the price at the expiry date is below the selected strike price, to buy at the strike price. So this is basically the definition. If you're an options seller or an options buyer, this may sound familiar. So we are going to talk about each of these specific words next. What is the strike price? Well, the strike price is actually just the price you select your obligation coming from. So for example, 88,000 on Bitcoin or 3,000 on Ethereum. We go into an example later on. The next thing is the expiry date. So you enter into an obligation for a specific amount of time, and this obligation needs to end at some point. In case of the dual investment on Pionex, it always ends at 8 AM UTC. So whatever time this is on your locally, but 8 AM UTC is when the obligation expires. The premium. In Pionex it's actually called rewards, but this is basically the amount of USDT or USDT, in this case of buy low, you receive regardless of what happens for that you enter into this obligation. So for example, we're currently at the 5th of November and Bitcoin is at 100,000. You enter a buy low for the 8th of November for BTC at 98,000 and you invest $1,000. So the strike price in this case would be 98,000, the expiry date would be the 8th of November, so 3 days out. And for example, you received $5 in the rewards, so $5 in premium. So what can happen? At the 8 AM, or actually the average of the half hour before, it is evaluated what the current price is. Is the current price above your strike price, so above 98,000? Nothing happens. You just collected the $5 in premium you initially received and you can move on, enter the next one or whatever you want to do. What happens if the price is below 98,000? You remember, you entered in an obligation if the price is below your strike price that you need to buy at the strike price. So however far we drop below 98,000, we are now going to need to buy with our investment sum for 98,000. So in this case we buy the $1,000 plus the $5 in premium we received initially, so $1,000 and 5, to buy Bitcoin at 98,000. So what has this netted us? In this case we have basically entered at the lower price. So if we bought directly at the 5th for 100k, we receive now an entry at 98k, and we also initially added $5 into our buying power. So let's look at an example in the options chain or in the contract chain on Pionex. So you can see here I'm on dual investment. I am on the invest USDC or USDC, whatever you want. So we are on the buy low. So you can see you have a couple of coins you can actually invest in. And this is always similar, but I will be focusing only on BTC. So currently we have selected the buy BTC and we are going to invest USDT. So what can we see? We see basically on the bottom the available contracts. So we can see, for example, if I want to move out one day, so this would be the next morning 8:80 AM UTC for at 89,000, I would receive over the whole year calculated 475% on my investment for the USDT I put in there. If I would do it every day, because this is basically on the year. So it currently says basically I get 0.765% ROI, but this is because it's only a couple of days. So let's take another example. Let's say we are currently at 86,800 and let's have a look. Let's say we are going to target the 2 days out 80,000. As we are currently in a strong downward movement, the ROIs are a bit or quite a lot higher than they used to be. So if you are going out a bit, you normally can collect between 20 to 50% a year, but I think it's perfectly fine because it's a perfect tool for DCAing into the price. But we go into the pros and cons later on, so let's just keep looking at this example. So if you're looking at the example of 2 days out, 80,000. So this would mean the price needs to drop another 7.9% from where it's currently at. And if we would buy this contract for the whole year, so every 2 days we would, and everything stays the same, we would receive a total of 41% on our investment. Or to put it simple, this contract nets us 0.178% on our ROI. So what does it mean? Well, you can see here a very nice example already, so we don't even need to put in. It's basically saying what happens when you put in 10,000 USDT. Well, two things could happen. Either we could end above the strike price of 80,000. This is green, so we would return $10,017.85. so there comes these 0.178% into play, because this is actually then the amount you would receive. Or if we drop below 80,000 at, this is basically my local time, so it's 1 hour later, and we would return 0.125 and a bit BTC. Of course, this is for the investment of $10,000, which is not bad considering you would buy a lot lower than the current price. You would buy at 80,000 and you would buy with $17.85 more than you initially planned to, or you just keep your $17.85. To further drive that home, let's look at a running order on my side. You can see this is a running order. I have entered it today. So you can see here I bought it today at 11 my time. I invested $139.80 in USDT. I selected something that netted me, if I would do it every day, 50%. The expiry day is tomorrow at 8 AM UTC. The strike price is 88,000. So if we're below 88,000, I would buy, which is currently we are. So currently we would have the scenario, because current price is 87,000. We had this scenario, so I would get 0.00159 and a bit BTC, or if we recover a bit and close above 88,000, I would receive $139.98, which is the reward of 17 cents, which I get no matter what. You think yourself maybe, that's very low a reward, so the ROI compared, for example, to leverage trading is a lot lower, but the risk is also lower. Speaking about risk, let's talk about the pros and cons. First, we start with the pros. It has a lower entry point, as the examples already showed. It has more scenarios to profit from, so we will get an example about that in shortly. This is a very personal one, but for me it's less stress, because I enter in it and then I just wait until it's the expiry. I don't need to check charts in between, because there is not much I can do in the meantime, which is also one of the pros or cons, whatever you say for yourself. This is basically on spot. So if you get assigned, you are on spot. The rewards are on spot, meaning there is absolutely no liquidation risk. So what do we mean with lower entry point? So example, at 90k currently, and we are buying low at 88. So if we are assigned, so the price drops, we buy at 88 and we buy for the initial amount of premium, which is better than buying directly at 90k. So it's a win-win for our side. And if we are staying above the 88, well, we can collect the premium. We have more scenarios to profit from. So if you imagine what the price can do in 3 or 4 scenarios, we collect money. This is the same in an options selling side. So what can the price do? It cannot move at all. It can have an upwards movement. It can have a slight downwards movement. These are the 3 scenarios where we profit. Why? With no movement, the strike price is not hit, we collect the premium. Upwards movement, we move away from the strike price, we collect the premium. Slight downward movement, so normally you enter a strike price a couple of percentage below the current price, you still collect only the premium and have no risk. The only time where we actually are getting risk of assignment, and if it's really a risk, this is depending on, let's say if you don't mind calling the coin, in my case for Bitcoin, it's perfectly fine for me. It's not even a risk. I want to hold the coin and I want to get it cheaper. But the only time where you can actually get assigned, meaning the USDT or USDC, whatever you invested, is converted to the coin, is when you get a stronger downwards movement. Less stress, well, we also already covered that. It's a personal opinion. For me, the expiry time makes it less stressful because there's not much I can do. This is, for example, a very different thing to options trading. That's why I said it's similar, but some characteristics are different. In options trading, you can at all times sell your option for a loss or a gain, depending on what the price is. So the price of an option changes. In this case, it's set and done, and it takes like 5 minutes to execute. So it's I open the page, I look at the charts, or I don't, or I'll just look at the RPI or the percentages. I want to have it down, and then I enter and be done. Or I do it the same next day or 2 days, depending on how far away my strike prices are. You have no liquidation risk. We covered already, it's spot. Spot is king, and spot lets me sleep well at night, so I don't even care, at least for Bitcoin, if you're going down 10 or 20 or 30%. There is no risk in liquidation, and I think long term, Bitcoin knows only one direction. I might be wrong, so this is no financial advice. But personally for me, it only can go up in the long run, so absolutely fine doing that. But it's not only sunshine and rainbows, there are also risks. I could identify 2, maybe there are more, but during my time doing that, and also basically they are more or less the same when selling options. The first one is missing gains, and the second one is holding the bag. What do I mean with missing gains? Well, for example, take the Bitcoin price again is at 90k. You enter a buy low at 88k, so you would be perfectly fine to have a bought at 88k, and you have a bullish outlook. You assume the price is going up sooner or later. You have a price drop hitting your strike price shortly, but it moves up again before the expiry, so you need to be below 88 during the last hour on average before your expiry. So it doesn't matter if you have been below at some point, you need to be below at a specific point in time. And then it skyrockets to 95k. So you're not assigned, as the price was not below at 88 at expiry. So you're not in a position, you just collected the premium and that's it. So in this example, it would have been better to buy at 90 because then you would have been able to ride the complete move upwards to 95. But yeah, it's timing the market, at least in my book. And I think that's very hard to do. So in theory, this is a con, but I don't see it like that. But it's basically a perspective thing, right? I don't think you can time the market. So for me, that's not actually a thing. The second thing is holding the bag, but this is in general with spot trading, because you have a problem if the coin drops hard. So if you are, example again, buy low at 90k and the price drops to 85k. Yeah, you bought at 90, now you're at 85, then you're maybe at 80. And it keeps going down and down and down. So you have unrealized losses. But the good thing is they're unrealized because it's spot, there's no liquidation risk. So in my case, I wouldn't mind, at least for Bitcoin. Another thing that was asked on the Discord is maybe some hedging. Are there hedging strategies? I came up with a few, and some of them I'm also using. So let's talk about hedging missing gains. Well, honestly, I think you can split your investment from dual investment into dual investments by board and by spot. For example, you planned to initially invest $500 into dual investment. You could do $250 you buy at the current price and $250 you use in the dual investment. The con is the average price you would have bought if the price tanks and your dual investment is triggered is higher than if you would have put everything in the dual investment, as well as you get less premium from the dual investment as you're only investing $250 instead of $500. But imagine the scenario with the skyrocketing. You bought at least $250 for 90k, so these $250 are riding the rocket upwards. So you have a bit of both. You have a partial position that is riding the rocket, but you're also giving away some of the benefits of the dual investment. So this could be something, and actually this is something I do. I tend to split and I buy directly half of it, or you can even change the ratios. Hedging, holding the bag. One thing I could think about, but I've never done it, is you could, in theory, open a short position on a 1 or 2x leverage. This could be something if you're anticipating more downwards movement, but as I said, I have never done it. I'm usually also, with the first one, split my investment that I do in dual investment into multiple strike prices. So for example, you again have $500 you want to invest into dual investment. You could do half of it for the 88,000 strike price and another half for the 86,000 strike price. Of course, if it drops to 80, 70, 60 or 50, you're still holding the bag, but you're already lowering again your average entry price, because now your entry price would be 87 from the dual investment plus whatever rewards you received. So you are definitely better off if the price drops a lot than you would have been if you just put every $500 in the 88. And maybe the price is stops somewhere in between. So if, for example, 87. So then you would buy for 250 Bitcoin and you would have 250 left for the next round of dual investment. As I said, I use the split approach and we can see that perfectly here. So I have some the exact position we just had a look at where I'm not have it split 50-50 because I have some investment in USDT and some in USDC, different sources, different stuff. But anyway, you can see this one we talked about already. It has 88 as a strike price, and the other one that you can actually see here is 90 strike price. So when I entered it today, I think the price was at around 91.50 or something, or 91.500, and you can see a token nosedive, which is fine. It's nothing I hoped for, but it happens. So I'm quite certain that, for example, this position for 90,000 will be assigned tomorrow. So I will buy this amount of Bitcoin tomorrow. And the other position for my 88 strike price, maybe we see a recovery. We have still like 14 hours left until I get the result, so maybe we claim or maybe we drop further. But you can see already pros and cons about this approach. For example, you could see this one is netting me 42% on average a year. Always a year, right? And this one only quoting 50%. But I already reduced my average if both are triggered to 89 plus rewards. And this is something I would recommend everybody doing, but maybe if you have some technical analysis with support and resistance or something like that, then maybe you can put everything on one strike, but I like to spread out my strikes a bit. So, some tips and tricks for buying low. The amount of rewards you get are basically like an options trading based on volatility and uncertainty. Well, and volatility actually just means uncertainty again. So there are two things that can influence the amount of rewards you get. One is time, because the further out you go, normally, the more uncertain is it how far the price will move. And normally you get more premium. And the second one is volatility. And in most cases, this means downwards movement. So as I said in the beginning already, currently the RPRs are quite inflated because we have huge downward movement. We are dropping like it's hot, and therefore it makes sense to not always each day go into dual investment. It might make sense to wait for large red candles or even completely large red days, like currently, for example. So we moved today already 4,000 down, so we are from 91 to currently 87, and we also saw already 86. So today would be, just right now, would be a perfect entry point. I entered in the morning because yesterday was also not a great day, and I got quite nice premium. Sometimes it makes sense to compare the RPR values between days. So if you are looking, for example, at the options chain, one thing I just want to notice shortly, at least on the web, is where for whatever reason they decided to split it into low risk and aggressive mode. So for example, you can see here that we are currently at a bit over 87,000, and you find the one day 87,000 in the aggressive mode because it's only 0.4% away, and the 86 suddenly appears in the low risk and it's 1.7% away. I'm not sure why we did it, but anyway, if you don't find a strike price, maybe it's too aggressive, you find it down here, otherwise you find it on the top. And of course there are only a certain amount of strike prices available. So for example, today we could only go, or tomorrow we could only go down to 80. So another 8.6% down. More is not offered on the platform. But what I want to show is basically that it sometimes makes sense to look at certain strike prices and determine if it makes sense to go further out. For example, this is a prime example, is the 82,000 strike price. Tomorrow you would get 37%, meaning always this, you need to redo that basically every contract duration, so in this case every day, and the conditions would need to stay the same, and then you would if you do it 365 films, you would receive 37%. Or if you go into details, you would see that it is actually receiving 0.059%. Keep that number in mind. So it's 0.059. And if we do look at the same thing, just 1 day out, we get a lot more. We get 51% on the year. Or if we have a look at it on the ROI, we get a 0.221%, or now we need to divide it by 2 because it's 2 days. On the day, we would get 0.11 compared to the 0.06. So it's basically 0.04% more, and this is quite nice. I mean, it's changing all the time. Now it dropped a bit because the price is rising suddenly a bit, so maybe we see the 88 tomorrow. And so I don't get assigned on both, but we will see. Anyway, this is something you can have a look at. And I, in the beginning, always did 1 day expiries. Now I'm tending to do 2 or 3 days expiries, depending always. I have not looked in the past on the further out dates. But I think you can get better deals. Because imagine you could even get the same amount for the 1 day, so 0.06, but maybe 1 strike down, so you're even further out, and the risk of getting assigned, if you don't want to get assigned, is even lower. So look around, compare, and have your own strategy. One thing to notice, during weekends, the RPR drops a lot, because on the weekend, the traditional markets are not open, and a lot of institutional players are not up, meaning there's not much volume and not too much movement. If we have a huge sell-off on the weekend, you still can get very nice RPRs, but don't count on it. The weekends are normally boring. Either skip them completely or take a longer expiry and just skip the weekends basically. So you get better deals for 2 to 3 days. We already covered that, and we already covered the bad RPR on the weekends, because volatility is low and therefore the premium is less. So the last couple of things to mention. Personally, this is something I do, but it's up to you what you want to achieve with this. I would do this only for coins, like in options selling. I would only do it for stocks. I do not mind holding long term. So I would not do it on any shitcoin or any coin which I do not believe in the long term, because would you buy spot on a coin you do not believe in? Would you do it 300, 500k, invest that amount? Ask yourself that question. If you cannot comfortably answer this with a yes, it's probably best to skip that coin and do it on something else. I mean, the investment is not available on any coin. It's, I think, 15 to 20 coins, but at least the big players are there. So Bitcoin, Ethereum, Solana, XRP, and some others. You can see and check it in the application. Do not be afraid to go out longer time frames. When you're far OTM means out of the money. So this is actually something more for the sell high approach. But if you're just wanting to have a bit of exposure and you say, I'm expecting a 15 to 20% drop, go out 16, 20, 30 days. Why not? I mean, you have a lot of different expiry times. So you can see at the longest currently is 309 days. I mean, the RPR is not that great, but it's 40% down. So let's check at the aggressive mode. What do we get on the aggressive mode and 300 days? Well, you could get 12%. So you could say, okay, I'm expecting in almost a year that we are probably not seeing 80,000, or we covered already, depending on what your time frame is. And you can get 80,000. Interestingly, though, if you do the same for 218 days, you get almost the same, and you can go down to 75,000. So you also see here it makes sense to compare, because 80,000, it's even more for 218 days. You get 14%. So do not be afraid to go out. I mean, I would never go out 218 days, but I have been doing 8 days, 15 days, and even once 36 days or 30 days, depending on where you are. They are always fixed duration. So just check them out, and I mean, what's your goal? And depending on that, you need to act like that. And I personally think this is a great tool for DCAing. So this nets again into the thing about doing this only for the coins you do not mind holding, because these coins you probably would DCA anyway, and with that you can DCA it and be probably a bit more price efficient Yeah, and that's basically my deep dive on the first part. So we have just talked about buying low. I hope I can get within the next week the second part of the series where I talk about the sell high, which you can use to DCA out or doing the wheel or whatever you do. So as just a preview, you can see I'm doing it here, for example. Also again tomorrow, where I invested some Bitcoin, which I initially bought from Dual Investment with the strike price of 96,000. And the cool thing about Dual Investment from the sell high perspective is that the rewards are always in the coin. So in the buy low, you'll get rewarded USDT or USDC. And in the sell high, you in this case get rewarded Bitcoin, as I am investing Bitcoin or Solana or XRP or Ethereum, whatever you use. And I am using that to slowly but surely build up my Bitcoin position. If you have any questions or comments, leave them down below or join my Discord where we can have discussions about that. And I hope you learned something, or at least it was interesting, and see you in the next one.